You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. You are listening to watching the Financial Survival Network. Well, will gold finally have its day? Noted gold analyst, a junior stock mining analyst, David Erfle is with us. And now you find his work, his writings at Junior Miner Junky. That's JUNKY.com. David, welcome back. So this is finally the moment we've all been waiting for the past decade.
Thanks again for having me on, Kerry. Always great to talk to you. Yeah, it sure feels like it. You know, after the gold price went down an unprecedented 7 consecutive months, it created a bear trap, and we had a huge move of over $200 that is now finally starting to consolidate here. You know, the gold price earlier this week ran up to where it began this year at around 1835. And after Fed speak yesterday, starting to finally consolidate some of those huge gains, while the stock market is really rolling over hard here. So risk off has come back into the sector, into the marketplace. And, the numbers that came out today, there's a flurry of economic numbers came out today, and they all point to a recession that the Fed continues to deny is going to happen. I mean, this is from yesterday during his press conference after they raised rates to 4.25 to 450. They basically denied that there's going to be a recession. I mean, this is from the same institution that tried to convince us that inflation was transitory at this time last year. So, it's going to be really interesting how 2023 begins as the stock market is beginning to roll over hard here.
Hey, and if we look at the Bitcoin to gold ratio, it's under 10.
Yes, the safe haven of cryptocurrencies turned out to be a falsehood. Basically, what's going on with the cryptos in the crypto space? The last time the gold sector was in a position like this, after it had gone down for so long, and the miners were really beaten up going into 2019. A major headwind was the crypto space. Gold was being poo-pooed as a barbarous relic yet again. The thing to get into as a safe haven is cryptocurrencies. Well, we found out that that's definitely not the case. Matter of fact, you've seen countless millennials lose everything over this. And it's really going to be interesting how that plays out going into 2023. They just finally arrested SBF, and I think he's going to be taken to the same detention center that Epstein was taken to. So it's going to be interesting how that plays out before they start questioning him. I think he was supposed to go in front of Congress. They nixed that, and so it's going to be interesting.
Well, I hope they check their video equipment at the New York.
Yeah, beef up those guards. Yeah.
And get some part-time, get some real guards rather than the temp guys they got from Manpower or wherever they got them from. I wouldn't be writing him any insurance policies, that's for sure.
No, that's for sure.
Although, hey, Ghislaine Maxwell's still around, to everyone's shock, right?
Yeah.
Well, but getting back here, I saw somewhere that you said you're all in on the sector.
Yeah, I had a bunch of cash that I was starting to deploy the past few months, and basically deployed the rest of it this week into a basket of juniors. I mean, we've had, during this move up in the gold price, what we saw strong relative strength in the miners and silver, which tend to move together. So coming out of a major accumulation base after a 2-year shellacking in a sector that everybody loves to hate right now. You've had tax loss selling, finish off the juniors down to ridiculously undervalued levels here. These quality juniors, the management in these quality companies have been doing the right things. They've been raising money, when their share prices were high, and keeping their share count to a minimum. And recently, also the private placements have really picked up over the past few weeks. I mean, I've talked to many people in the industry, and a lot of these private placements have shut out retail. By the time retail calls and says and mentions that they want a piece, it's already been taken by institutions. So, and also one of the companies that I own that I was adding shares to, they announced a private placement with a full warrant, and the stock price, the full 3-year warrant, and the stock price has already reached the full 3-year warrant price. You
Really?
never see that
in the money,
during a bear phase in the sector, especially after a capitulation phase has taken place in the sector, which recently wrapped up. So now with tax loss selling mostly wrapping up this week, anybody that was going to sell for tax loss has done so by the end of this week before we go into the holidays, where pretty much everybody takes the rest of the year off. So it's going to be interesting to see how the beginning of 2023 unfolds with a lot of these juniors, being left for dead.
Well, one question I've asked a number of mining company executives recently is institutional interest, wealthy investor interest, large investor interest has been at really high levels, and yet the retail demand has pretty much been non-existent. What do the institutions see that the retail can't perceive?
Yeah, it's interesting. If you just take a look at the volumes, on these indexes. I know the venture is only about half mining companies now, but if you take a look at the volume now for the past year, it is 50% lower than the last time we were in a situation like this in the mining space in late 2015, where we just come out of a vicious bear market, which saw the GDXJ go down 85%. The volume was twice as high back then as it is now. I mean, this is basically I don't really care about this sector volume. It just harkens back to the phrase, never sell a dull market, especially when, the wind really appears to be the backs into the back of the gold space here. It sure is looking to me like we're going to be heading into a stagflationary recession with a war backdrop into 2023. This is very bullish for the gold price. But as far as institutions are concerned, they see that writing on the wall, yet retail doesn't. And another example of retail not being in this space is ETF buying. We see ETF buying has not come up to the levels of where the gold price has. Matter of fact, I think PSLV, the Sprott Silver Trust ETF, I think it's trading at a 5% premium to spot. And you try to go into the coin market, and there's 30% premiums on everything right now. So it's really an incredible opportunity here to accumulate a basket of juniors, of quality juniors at a time when nobody cares about the sector, and it's been completely obliterated via tax loss after going down for 2 straight years.
Yeah, it's rather remarkable. I've never seen anything quite like it. But the fact that the institutions saw them putting money into companies at a premium, and majors putting money into promising juniors at a premium to market kind of says it all.
Absolutely. Yes. And the retail investors still could care less about the sector. I mean, it's going to take the gold price. I think it's going to take the gold price getting above 1,800 and staying there for a long period of time, and eventually getting over that 1850 level before your generalist investors finally start paying attention to this sector. It's been the only time gold's been in the major headlines recently. It's been to poo-poo it, and basically, when the Wall Street Journal came out in early September and said that gold was no longer a safe haven, it turned out to be a very loud bell for a bottom a week later, because that's when the gold price bottomed around 1620, and it's now made a triple monthly bottom at 1620. So that base is looking very strong as we go into 23.
Yeah, and let's not forget what's happened to the FANGs and the general index, the broader index. It's been pretty gruesome there.
Absolutely. You take a look at the last time we had major bear markets in the stock market, during the tech bust. That's what created the secular bull market in gold at the beginning of the century. When you had the HUI go up 1,600% from 2001 into 2011 in a decade, basically. But if you go back further than that, you go back to the 70s, which was that stagflationary period. You saw the gold price after the gold standard was taken down. We saw the gold price go from $35 to $850 in the space of less than a decade. So it's all the stars are lining up for the gold sector here while nobody's paying attention.
Hey, so what about rising interest rates? It's often perceived by the market that that is a damper on the gold price, but in reality, not so much.
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Absolutely. Yeah. If you go back to the 70s again, we had the gold price go from $35 to $200 into 1974. And the Fed started raising rates, and gold got cut in half by 50% down to $100. And then when the market realized that, hey, the Fed is way behind the curve here, that's when they really started to raise interest rates. It went from the Fed funds rate went from 4.75 to 20 basis points, I believe, by 1980. And the gold price went from $100 to $850 while that was happening. So, it's the perception, basically it's the perception of the marketplace and how they feel, the central banks, do they have a handle on this situation? And I think that people are finally starting to realize that, hey, that's not the case. They do not have a handle on this. And inflation is getting out of control, and it's starting to look like it's going to be a stagflationary recession like we had in the 70s and 80s.
What about the situation in China? Economy is basically imploding. A lot of bad things happening there. The Chinese public really has not been a large purchaser of precious metals over the past decade, while the central bank has been, of course.
Absolutely. Yeah. China just came out and announced for the first time in 3 years that they bought gold. And of course, they never announce, how much gold they're actually buying. So, they probably own a lot more than they say they do. And, the last time they announced it 3 years ago was also when the gold price was having a hard time into the pandemic. So, what's happening in China, basically, from the visuals that I've seen, videos and photos, it's like a dystopian nightmare. And a lot of these people, they can't even get out of their homes to buy food, let alone gold. So it's a really sad state of affairs there. And but what's happened recently with that fire that killed 10 people, and one of them was a 3-year-old boy. The people are just like, you know what, we've had enough. We don't care if protesting has consequences. I can't live like this anymore. And we've seen them open up a little bit, but it's still pretty bad there.
Yeah, it's rather shocking to see. And then the widespread demonstrations, which could very well still be taking place, but the coverage is not quite up to Western standards, whatever those might be.
You can say the same thing about Brazil, where military law is taken over there, and mainstream media is not reporting it.
Brazil, where's that? That's one of those BRICS. But,
and Peru now also.
Yeah, the illusion of the BRICS countries taking over, just really turns out to be a real illusion.
Right.
So that leaves us going back to precious metals. Hey, what do you make of the recent reports of the run on the Comex as far as silver is concerned?
It's tough for me to pay much attention to that. There's been so much. There's so much, bad press about what's going on there. I don't know really what to make of it. I know that the physical market is still really tight, and I know that the premiums are still really high. So as far as and I know that it's getting tight as far as the metal on the Comex is concerned, but as far as it having very much of an impact on the futures price, that still remains to be seen. That's not really my area of expertise. I mean, I know that a lot of people have said that the market's been manipulated via the Comex in gold and silver for quite some time. Well, every market's manipulated to a certain extent. So, I can't. I know that it goes on, but I can't really pay too much attention to that.
All right. So, looking ahead, where do you think the best chances for appreciation for big returns is going to be in the sector?
Well, that's my area. That is my area of expertise, and that's quality juniors. I mean, if you've been accumulating a basket of quality juniors, for the past several months, you're sitting pretty right now, and this is what I do. I basically talk to management teams, and I constantly follow charts, and I keep up to date with all of them. And I've been accumulating these stocks for quite some time. And if you stick with the quality companies, the management teams that are serially successful, they've taken companies from discovery to a finance stage or even production, and with a minimal amount of dilution, while having a lot of their own money in the company at the same time, and also participating in the private placements along the way. I mean, if you've got a basket of companies like that, you should do very, very well over the next few years, let alone into 2024. So I think it's all setting up to where 2023 is finally going to be a very good year for our sector. After it's incredible, Kerry. If you take a look at how the correction unfolded from the last time that gold went up, that the mining sector went up so fast in a short amount of time, was in 2016, before the 2020 run up. In 2016, from January to the middle of 2016, we had like a 300% from trough to peak in the GDXJ, and it took exactly 26 months to consolidate. Right? We saw the consolidation end with an indecision candle in the 26th month of December of 2018. And the exact same thing happened again this time when the GDXJ went up about 300% from trough to peak after the pandemic from March, but it only took 4.8 months this time. into August. And that took exactly 46 months, which ended with a monthly indecision candle this past September. And we've seen a 40% gain in the GDXJ since then in 2 months. So what we're seeing today finally is some profit taking, after that huge gain. So, this is an opportunity for people who have been sitting on the sidelines, who've been watching this sector, who've been patiently waiting for a time to get in after they saw a huge move like that. This is a perfect opportunity for them to start accumulating or finish accumulating their positions.
So question is, how long can this go on for, David?
Well, it could go on for a few more months. If you take a look at the chart of the GDXJ and the chart of they're both showing inverse head and shoulders bottoming patterns, and the right shoulder could start to build out here. But also, if you take a look at silver, it's already broken out of its inverse head and shoulders bottoming pattern, and it's taken off, and it's blown through strong resistance at 22, which now has become strong support. It's trying to hold 23 here as we're speaking, but now 22, which was strong resistance after being strong support for a couple of years, is trying to become support again. And as long as the miners and the silver price continue to show relative strength to gold, and that's going to be very bullish going forward. So, as a student of this sector for the past 20 years, I'd like to see a stronger base built in the mining shares and in the gold price. So this weakness is rather welcome here because they've gone up so far so fast, and a consolidation here would be healthy.
All right, I'll buy that. All right, well, I think we covered enough for today. Make sure you go over to David's site, juniorminerjunky.com, and think about subscribing. I'm a subscriber myself and never miss a week, David. Love your commentary and your insights into the market. Hey, if you got a question for David or myself, shoot us an email, kl@kerrylutz.com. And while you're at it, you're on the site, you can click the link, get to David's site, and sign up for our free newsletter. David, a pleasure. We'll talk to you again real soon.
Thank you, Kerry. Always a pleasure, and thanks for having me on, and happy holidays and a happy new year to all your listeners.
Likewise.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.